Good morning. I'm Keith Lieberthal, and this is One Step Ahead. Today's topic is oil and political instability. Consider these recent headlines. British sailors captured by Iran. Oil jumps $4 a barrel. Nigerian rebels attack offshore rig. Oil jumps $1.50 a barrel. The logic seems simple enough. Political instability can disrupt current supply, which raises prices. While this is true, it misses the bigger picture. Chronic instability leads to underinvestment in production. Over the past 2 years, two sources of instability have hindered investment: government seizures of oil assets and violence in producer countries. The result is flattened capacity in the face of rising demand, a recipe for higher prices. Governments in South America and Central Asia have been nationalizing their oil industries. Like Arab states in the 1970s, they're seizing control of national fields and canceling foreign companies' contracts. Earlier this week, Hugo Chavez took control of the last private oil field in Venezuela, culminating his campaign to nationalize all of Venezuela's oil resources. Likewise, Evo Morales nationalized Bolivia's oil and gas last May, and Ecuador seized Occidental Petroleum's fields. In Russia, Vladimir Putin used prosecutions, environmental enforcement, and rigged auctions to reclaim Yukos oil and wrest control of valuable Siberian fields from foreign companies. At the same time, other producer nations were racked by violence. In Iraq, terrorist bombs ravaged markets and insurgents killed over 100 U.S. soldiers last month. In Nigeria, long-awaited presidential election was discredited by voter intimidation and rampant fraud. And in Ethiopia, rebels executed over 70 people working at a Chinese-run oil field in a bloody warning to foreign companies. These seizures and this violence have affected oil supply, but not in the way you might think. Although prices have jumped on each new report of instability, production levels have remained steady. Of course, this stability is the product of many factors: better infrastructure security, recent OPEC discipline, but it also reflects a simple truth. People fight to control oil, not to destroy it. Though rebel groups may occasionally disrupt supply for political gain, most recognize that victory at the expense of oil profits is hollow. Likewise, while Chavez and Putin may threaten to cut supplies, the fact is they need our money as much as we need their oil. In short, supply anxiety, as reflected in current prices, has been more volatile than actual supply. The future, though, is a different story. Political instability has stalled investment in oil production despite rising demand, and there are three reasons why. First, companies don't want to put their people and resources into combat zones. Where a host government can't provide basic security, as in much of Iraq today, foreign oil companies can't be confident that they can build and run a large operation. Second, foreign oil companies want to build fields for their own profit, not for Hugo Chavez's or Vladimir Putin's. Particularly in the wake of recent seizures, foreign oil companies are leery of making major capital investments that could be nationalized if political winds shift. Third, domestic politics often force national oil companies to bankroll political programs over investing in infrastructure. For example, it's estimated that Venezuela's national oil company spent 40% more on Hugo Chavez's social programs than on oil and gas investment. This translated into a $3.7 billion loss in 2006, despite record oil prices. This concern about underinvestment in future supply is not just theoretical, it's in the market. Typically, the combination of high oil prices, foreseeable demand growth, and plentiful reserves would stimulate investment in production capacity, and this would lower future prices. Today, however, future oil prices are higher than today's spot prices for every single contract through the year 2015. The markets clearly sense the problem, but what they haven't identified are the opportunities. And I'll be back in a moment to talk with Jim about finding those opportunities. Thank you.